Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's Top Stock Pick segment. I'm Jeremy Mullen, and I will be doing GLOP Partners, ticker symbol GLOP. The stock is a Zacks ranked #1 strong buy that acquires, owns, and operates liquefied natural gas carriers under multi-year charters. So what does this mean? Well, the company owns a fleet of large boats that transport LNG, which is short for liquefied natural gas. I'm sure you've heard all the news in Europe. It's been struggling with soaring high natural gas prices. This has been mainly because of the Russian invasion of Ukraine and the conflict between Europe and Russia because of the war. Inventories are very low, and there is concern that countries like Germany won't have enough natural gas for the winter. Well, GasLog and other LNG carriers like it help import LNG. And since demand is so high, these companies benefit from this current situation. So let's look at the stock and see how this might affect price. Okay, here's the profile page for GasLog Partners, GLOP. The company was founded in 2014 and is headquartered in Greece. As of February of this year, it operated a fleet of 15 LNG carriers. GasLog has a market cap of $300 million and pays a dividend of 0.7%. You can see the forward PE is very low, under 4, which gives it a Zacks value score of A. Growth is at B, but momentum is at D. So we have to pick up the pace on the momentum aspect. Looking at earnings, let's look at what we just did this past quarter. We saw 15 to 16% EPS beat. As you can see, it's kind of volatile up and down since the COVID crash. But this quarter was pretty good. When you look at the year-over-year numbers, really good. Q2 came in at 37 cents versus the 10 cent last year. Revenue was $84.9 million, up from $70.4 million last year. During the quarter, the company reduced its leverage by rechartering the steamship Methane Rita Andrea for 1 year. It also sold one of its older steam-powered vessels for $54 million. So a real big key is getting some of the debt off the balance sheet and just taking that leverage off while these energy prices are higher. Management had some nice comments on the quarter and said, quote, "We continue to successfully execute on our business strategy and capital allocation plan, deleveraging our balance sheet and continuing our preference until unit repurchase program and further reducing the all-in break-evens of our fleet," end quote. So you can see they're focused on just reducing the debt and just improving that balance sheet while they can. Now, LNG demand is going to help. As I mentioned, that strong demand is fueled by low inventories in Europe and this continued disruption of gas pipeline imports from Russia. You've probably heard on the news the Nord Stream 1 pipeline has been having reduced flows. And looking ahead, there's not much capacity coming online. Between the years of 2023 and 2027, they see 163 metric tons coming online, but that is in the future and it's not addressing the current problem. So as long as the Russia-Ukraine conflict continues, investors should expect LNG demand to remain high. And that's really affecting the estimates. So let's look at those. You can see here, they were not 90 days, we were looking really good, right? There was a dip down as energy prices dipped as well. We saw both natural gas and crude oil fall substantially, but we have bounced back since. So estimates are ticking back higher. For the current quarter or last 30 days, we see a tick higher of 13% from 24 to 27 cents. The current year, we have a tick higher of 9%. But look at next year, 114 to 144. That's an uptick of 26%. So analysts are pretty optimistic on the cash that's going to be coming in and their earnings. Stifel commented that they view this quarter as a respectable with steps in the right direction, but only gradual steps. So there is room to improve here, but they also see GasLog trading in line or slightly better than their peer group. So let's take a peek of the chart and see where the stock might go. Okay, I wanted to show the chart going all the way back to when the company debuted. Obviously not performing well at all. The COVID crash really brought it down to its all-time low of 150. Since then, some ups and downs, but pretty much trading sideways around this $5 area. I have this trend line here, which really isn't a trend line, but it could be in the future to just kind of look for where, if we did break out, where we might go. Now, this will be falling in the future, but I'm just kind of watching this in case we do get a spike higher. If you are along, where you might want to take some off. But let's zoom in and see what's happening, lately. So as you can see, in March, we made a low around $3 and then rallied aggressively. Okay, had some earnings, rallied again to highs we haven't seen in a very long time since the COVID crash. And what I have drawn up is a Fibonacci retracement level from these lows to these highs. As you can see, the 61.8% retracement held up once, twice, along with this 200-day moving average. So the red line is the 200 days. So we have substantial support at this $5 level. And as you can see, this $5 has been kind of a place where it's just been chopping around. Now, what the bulls need to do, they need to maintain this blue line, which is the 50-day moving average, and get price above 6. If we can get above 6 with some high energy prices, this might be able to squeeze back up to these highs and perhaps take out that $8 targets. This is my targets for this Fibonacci setup. So perhaps into the end of the year, if natural gas and crude oil prices can continue to go higher, GLOP can finish this setup and get to $8. From there, I'd probably be taking profits and then resetting the trade and just keeping an eye on it. But this is what I'm looking for GLOP into the end of the year. Okay, gas log has been helped by a surge of global energy prices. The company is taking the opportunity to deleverage and position themselves better for the future. If energy prices can remain strong, investors should expect GLOP to resume its trend higher into the end of the year. Okay, that's it for me and my top stock pick. Here is Dave Bartosiak with his.
All right, thanks, Jeremy. I've got an idea here for my top stock pick of the week. It is Casella Waste Systems, ticker CWST. Let's take a look at Zacks.com and see why I like it so much. It is a Zacks rank #1 strong buy in the pollution control industry, which ranks in the top 13% of our Zacks industry rank. As far as style scores go, F for value, A for growth, F for momentum to help it round out with a VGM composite score of C. Let's take a look at the detailed estimates page, see what we have going on. So year over year, revenue growth very strong, 18.36%. Next year, that's going to settle into 8.5%. Translated over the EPS side, 20% growth this year, almost 20% growth next year. So real solid growth numbers there. And look at the movement in these analyst numbers. Over the course of the last 30 days, you have 2 analysts up in the ante for next quarter, 4 for the current year, and 4 for next year. That bullish sentiment has pushed next quarter's earnings from 23 cents up to 25, current year 104 to 108, and next year 122 up to 130. So things are definitely moving in a positive direction. And why is that happening? Well, we've got a streak of surprises here. 24% surprise, 22% surprise, 16%, and 25% over the course of the last year. That is a pretty good streak. The last thing I want to show everybody is my favorite chart here on Zacks.com. My favorite chart, price consensus and EPS surprise. Lots of data in one chart. This black line corresponds with the stock's price, which is along the right y-axis. The multicolored lines represent the evolution of our Zacks consensus estimates over time, correspond to that left y-axis. Little green arrows are earnings beats. And check out the string of beats for Casella Waste Management. Can we even find a red one? Yes, we got to go all the way back to the first quarter of 2019 to see a miss. And if you notice there, that's when estimates took a tumble. But what's happened recently? A little bit of over-promising, and I would say under-delivering, but you can't really say that when they're beating, right? But I guess lofty expectations that get reeled in. However, look at the trend recently. So we have upside movement in these estimates creeping in over here to help support this stock's price. So as long as those estimates can push in a positive direction, it's going to be a great bullish underlying tone here for Casella Waste Systems. So there you have it. That is my top stock pick of the week. We double teamed you with the 2 new dads out here, Jeremy and I. although I guess this is number 2 for him. But thank you guys so much for checking us out here on our top stock pick of the weeks. Be sure to check out Zacks.com/promo for this week's deal on Zacks Income Investor. For Jeremy and everybody else here at Zacks.com, I'm Dave Bartosiak, and we will see you next week.